Hey guys, welcome back to the Broad Investors channel. My name is Amin. This is my fourth video so far. And this one we're going to be speaking about 5 best growth stocks that I believe in. Okay, so in growth we're talking about they will grow continuously for the next year or two. Okay, so I've reviewed hundreds of stocks as shown in a previous video, the first one I've ever did. It will be in the circular button right above here, in the top right hand corner of this video. Okay, these stocks you can find in major trading platforms, i.e. Freetrade, Hargreaves Lansdown if you are using that. I personally use Freetrade, and if you click on the link below for that application, you will get one free share worth up to £200. That's £200, it's a fair amount. So I would highly recommend it for those of you that are new to investing. Okay. So in this video we're going to be speaking about the 5 best growth stocks. Okay, for the best growth stocks we are interested in the company's EPS. Now you might think, well, why? What is an EPS first? EPS really stands for earnings per share. Okay, earnings is just another word for profit, so you can think of EPS as profit per outstanding share. So the more profit a company makes, the higher this number is. Okay, EPS is released each quarter in the company's reports, and EPS is widely used in the industry as the best indicator for future potential growth. Okay, so if we're looking for growth, we need to look at the EPS, hence why EPS is really important for those long-term investors. But more to the point, I'm really interested in EPS normalized. Normalized here means the removal of unusual or one-time expenses that do not reflect the usual operations of a company. So if a company is buying buses for some reason, don't know why, let's say they're not a bus company but they're buying buses, this would be an unusual one-time expense. Okay, so for a growing stock, we need to be able to look at their EPS normalized estimates for this year and next. Okay, now I know trading sometimes can feel like this, but also like this. I hope these videos become more fun and more enjoyable for you to watch in the future, but let's get into it.
This is a company called Essentra. This is an industrial supply company. Their ticker symbol is ESNT. Okay, just to give you a bit of background and not bore you too much in what they actually do, but they are providing components in multiple industries, such as caps, filters, hose protections, fasteners, and many more items. During this pandemic, they provided vital components for the healthcare and medical sector. Okay, let's get into the real stuff. So their EPS normalized last year was 3.24p. This year this is expected to be nearly 7 times higher at 21.1p. So that is a lot of profit per share. Okay, their current stock price is £2.95, so they're trading at only 14 times the earnings. So the lower this number is, the better. So if the earnings per stock price or share price is low, then that means it's pretty good. Okay, next year analysts believe the EPS normalized would rise to 25.5, so it rise from 21.1 to roughly about 25.5 pence. Okay, this company also provides dividends, and for this year it's estimated to be at 7%. Okay, currently they're already up by 24 pence this month. Okay, so that's a growth stock. Okay. So you might ask yourself why, how come this company's rising profit is so high compared to last year? Well, this is due to their joint venture with a Chinese company. The outcome of this new venture will be a construction of a new plant and machinery in Q3 in China. Okay, Essentra expects the joint venture company to start shipping first production volumes to local customers in China in Q1 of 2021. So they intend to be a major player in the Chinese industry in years to come. So for 2021, I've calculated the fair value share price of this company to be around the £8 mark. That's £8. So right now they're at £2.95, as you can see. and I think by next year, whether it's start or end of next year, I reckon they'll be at the £8 mark. So calculating a fair value of a company share price is really another topic in itself, and I might do it in another video. Okay, so for me, this company is a really strong buy. Okay, so as you can see, not many people are talking about this company, especially here on YouTube, because people have not done their due diligence in reviewing and researching small companies like Essentra here on YouTube. However, with the Broad Investor channel, you're going to be given a thorough, thought-through, sound information, hence why I encourage you all to join this educational channel. Okay, so let's move to number 2, FUTR. Okay, this is a media company, okay, ticker symbol FUTR. They are a British media company founded in 1985. They publish more than 50 magazines in fields such as video, games, technology, films, etc. Okay, so let's get to the nitty-gritty of this company. Last year, their EPS normalized was 31.9p. Okay, this year this is expected to be nearly 2 times higher at 61.8p. Their current share price is £12.95 as of Friday, so they are trading at 20 times their earnings. Okay, so this is pretty good, as most investors will be happy to have a company share at 30 to 40 times the EPS. Okay, next year analysts believe their EPS normalized would rise to about 75.4p. Okay, so they are already up by 68p in the last 7 days. So I think this company might double by the start of next year. So I think they might rise to about 20 pounds by end of this year, maybe end of next year. Okay, the reason why there is such a rise in EPS is that they've just acquired a TI Media, and the latest trading announcement was very positive in this circumstance. Okay, they have a very credible CEO. They have an excellent financial performance of both organic and thorough acquisitions. Okay, so that's FUTR for you. I believe in this company. I think they'll do well in the future. Okay, no pun intended, of course. Number 3 is Morgan Advanced Materials. This is an electronics and electrical equipment company. Ticker symbol is MGAM. Okay, they are a global manufacturer of specialist products such as carbon, advanced ceramics, and composites for a broad range of markets. The company is headquartered here in the UK in Windsor. Okay, so their EPS normalized this year is 22.2 pence. Their EPS has been increasing consistently since 2016, when it was at that year it was at 18.3 pence. Their current share price is £2.41p, so they're trading at 10 times their earnings. So pretty good, not bad at all at 10 times. Okay. Next year, analysts believe their EPS normalized would rise to about 25.4 pence. Okay. Already this week they're up by 16p, and this month they're up by 46p. Okay, so this company is truly believes in organic growth, and they protect the carbon, and they actually project the carbon composite industry to grow at 20% for the foreseeable future. They have acquired a company called Carbon St. Louis, and Carbon St. Louis are experts in ceramic fiber. So this is another growth company which will do well. They'll do well in the upcoming future. Morgan Advanced Materials. Watch out. Right, another one. 4th one on the list is Laing. Okay, ticker symbol JLG. Laing Group PLC is a British investors company. They are developers and operators of private financed public sector infrastructure projects such as roads, railways, hospitals, private finance initiatives, arrangements. So just to give you an example, the Millennium Stadium was built by Laing. The second 7 crossing was also built by them. Their EPS normalized last year was 20.1 pence. This year, this is expected to be nearly 2 times higher at 36.2 pence. Okay. Their current share price is £3.34p. So they're trading at roughly around the 10 times the earnings. Okay. Next year, analysts believe their EPS normalized will rise to about 46.8p. So that's a significant rise from 36.2. This company is growing really well. They're making good acquisitions. They're venturing out to Latin America for the first time, and they'll invest about £1 billion. So they're also increasing their presence in the climate market and also in the data providing market as well. So they're making all the right moves. They know what they're doing. I think they know what the future lies for them. Okay. So that's Laing. Okay. Next on the list is Meggitt. A lot of you would know about this company and might even disagree that they are a growth company, but I think they are going to be growing in the next year or two. So Meggitt PLC, as you guys would know, for those of you that do, is a UK-based international company specializing in components such as subsystems for the aerospace, defense, and selected energy markets. Okay, the EPS normalized this year is 32.2 pence. Company EPS has been increasing consistently since 2016, when the EPS was 20.4 pence in 2016. Their current share price is £3.15, so they're trading at 9.7 times the earning. Okay, so that's pretty good, lowest so far in this list. Next year, analysts believe that EPS normalized would rise to 36.4 pence. So this week they're already up by 14p, and this month they're up by 54p. Okay, so 2019 was pretty strong year for them. They've had an organic revenue growth of about 8% and a good performance across all the end markets, okay, particularly defense. This year, I think they're going to suffer a bit due to the civil side and what's happened with this pandemic. But I think they have a well-diverse portfolio, so this should set them steady for the foreseeable future. Okay, this is the end of the video, guys. Please remember to do your own research, and the information provided in these videos are not financial advice. Okay, they are just for educational purposes. I hope you enjoyed this video. Please like, share, subscribe, the whole lot, and I'll see you in the next one.